Good day, friends. Calendar year 25 has been a year of roller coaster. We've had multiple challenges, whether it's trade war, tariff war, or actual physical wars all around the world. In Indian context also, it has been one of the difficult years from Indian equity markets, but we believe it's a year of consolidation. Although the year has not given great returns, but I think overall we still have made decent single-digit returns, and that too on the back of very strong last 3 to 4 years. We believe that a lot of actions, a lot of proactive actions taken by the government in this calendar year 25, starting from the budget of February 2025 and as recent as the GST reform that we have seen from August, September 2025, I think they are going to go a very, very long way in helping the overall economy to become very strong. The next 2, 3, 4 years, we believe, are going to be one of the best years for Indian equity markets. We believe that calendar year 26 itself, we will see quite a few sectors like the private sector banking, the automobiles, and maybe even some of the IT and selected pharma companies, which should do exceedingly well. We are extremely positive. I think there is one very big narrative that everybody has been talking about of foreign investors, selling in the Indian equity markets. To my mind, this has not been a very big deal because if you see the numbers, they have sold probably in equity markets in the range of about $18 billion odd dollars. At the same time, they are probably buyers of about $8 odd billion in the debt markets. But I think the most important point that everybody is probably missing is, if you see the domestic institutional investors, which is our domestic mutual funds and insurance companies, they have invested nearly $90 billion. I think that's a record by itself. Now, when you have $90 billion of inflows, a $10, $15, $20 billion of outflow is not a big deal anymore. I think keeping that trend absolutely alive for the next 3, 4, 5 years, I think we will cross $100 billion of domestic flows in the Indian equity markets very soon rather than later. So from that perspective, we are extremely positive. We believe the earnings growth is also going to be very strong thanks to all the reforms that have happened in the calendar year 25. So we strongly believe that the calendar year 26 to calendar year 27, calendar year 28, we will see high double-digit earnings growth, and which will get reflected in how the overall equity markets actually give returns to all the investors. Wishing all of you a very happy new year for calendar year 2026. Thank you very much.